welcome to the 12th edition of Voices from the Valley. I'm Shereen Bhan. Well, over the past week, you've been listening to us bring you stories of founders and entrepreneurs on what they're chasing after. But today, it's time for us to turn the tables over to the investors. Where is the money headed? Joining us now on this very special episode is Sanjay Nath, co-founder and partner at Blume Ventures, and Vivek Goyal, partner at Altimeter. Gentlemen, great to have you on Voices from the Valley. Thanks very much for joining us. Sanjay, this is now home for you. So from your vantage point here in the Valley, what does India look like?
Thank you, Shereen, for having us on. So it's the second homecoming, the second time I'm back here. In one sense, there's tremendous interest in India, and from the vantage point here, I see that excitement because India is both, cross-border AI and SaaS, but also the massive domestic consumer tech story. So tremendous interest, and Blume covers both. So yeah, I'm here, but I'm kind of a spokesperson, salesperson for India.
Yeah, spokesperson and salesperson for India, and I'll get to what you're selling in just a second, but let me get Vivek into the conversation. Vivek, to start with, a quick snapshot on the AUM that Altimeter is working with at this point in time, and the big bet is, of course, OpenAI for you guys.
Yes, so thanks, Shereen, for having me. So quick background on Altimeter Capital. We are a $10 billion tech-focused crossover fund based in the Bay Area. We invest in both public and private technology companies globally. And I've been in the Bay Area now 7 years, and I really think I've never been more excited.
Okay.
And Brad, who started the fund, he's been doing this for 25 years. And if you ask him the same question, he's never been more excited to invest in tech. This is definitely the golden age of technology. If all the tech waves we've had, starting 1970s with mainframe computing, 1980s with personal computing, 1990s and 2000s with desktop internet, and I think 2010s with mobile internet and SaaS, we've had like $20 trillion of value created in technology. But I think the next wave of GenAI in 2020s and 2030s is going to be much, much more. And you have finally a technology that can basically impact each and every sector of the industry globally, and we are very excited.
Well, the golden age for technology, that's the view there from Vivek. But let's talk about this transformation and disruption. It opens up opportunities, but it also could potentially be an existential threat for many companies that are currently public today or even private. What do you see on your radar, on your dashboard as opportunities, and where do you see the threats today, Sanjay?
Interesting. Well, I fully agree with Vivek. You called it the golden age. We're also setting the golden California sun.
Yes, we are.
Thanks to that. Well, if you go back to sort of Chinese literature and language, I think the word crisis, it has both, right? It means danger, also means opportunity. So along with every wave of disruption, there's the positive energy and the light that it brings, but also crisis. It's interesting to quote Jensen Huang, who says that the jobs are not going to be taken over by AI, but by people who can leverage AI. So I think that's very true, to bring in the human element. Our thesis is, again, we'll do about 2/3, 60% India for India, and let's say, a third or 40%, which is really built in Bangalore, Gurgaon for the world. Now, coming to your question about where the opportunities and the risks are, I think horizontal AI as well as vertical AI has the opportunity to disrupt a lot of the incumbents. So if you look at, let's take some cases. Let's look at Waymo in San Francisco. Right? Are
you Waymoing or are you still Ubering?
I have to wait for my younger colleagues to come. One of my colleagues actually, he lives in Bangalore but has done 40 rides. And I said, Waymo is going to come and say bye to you at the airport. And he introduced me, even though I live in the city. But what is really interesting is they are changing the user experience the same way Uber changed it when they came in. And that has the potential to disrupt so many industries. If you look at, we are also backing, we have Pixel, which is doing space tech, my juniors from BITS Pilani. And the Indian government as well as the US Department of Defense are big customers. So they have the opportunity to disrupt not just in one or two pockets, but the world. The other, what is the reason this is happening is youth. I think younger founders don't have the baggage, and they don't have to do things. They don't see the way the world, the way we saw it. So they said, let's just start from a clean slate. So whether it's space tech or autonomous robotics or I mean, there's a autonomous, it's a little late stage, a company called Monarch Tractors that I just saw, autonomous tractors. Now that is so interesting because, who thought, right, that there would be, so I think that the risk with this is what does it do to the traditional jobs? I think people, learnability and the ability to leverage AI. I don't think you have to, be a sort of master at vibe coding or know to code yourself, but you have to know how to use these tools. I think the younger folks who can leverage that, and even middle-aged and older folks who understand where this wave is coming, either you're part of the bandwagon or you're off. And I would definitely encourage everybody to be on, and I agree that it's a golden wave.
And let's talk about the OpenAI bet that Altimeter has made, and I'll get Sanjay to weigh in on that as well, and the impact and the implications of this for India. What is the hypothesis of what OpenAI could potentially mean in the next few years?
Yes. I think the numbers are, on a top headline basis, numbers are staggering. Media reports indicate that the latest valuation is around 250 billion to 300 billion. But if you take into context the revenue, so they are at 10 billion ARR, growing over 3x. And if you look at the TAM, so Google and Meta make around 300 billion in ad revenue every year. And if you try and experience the ChatGPT product, it's much, much more personalized. The other day I was asking ChatGPT what kind of stroller I should buy for my daughter, and I was actually in Sao Paulo, and the app wrote that, oh, I know you're in Sao Paulo, it's a city environment, so maybe this product you should buy from this store. It's so personalized, right? And it knows all about my history. So you can make an argument that the ads on ChatGPT, because of memory, are going to be much more targeted. And it could lead to a bigger TAM. So we believe that the company can grow from 10 billion to 100 billion in the next 5 to 7 years, just by targeting and taking into Google and Meta's TAM. That's just on the consumer side.
Yeah.
And look, I mean, history has shown that consumer is mostly a winner-takes-all market. So we are pretty confident that this category is going to be huge, and OpenAI is going to win in that. The second is the B2B market.
Yeah.
So on the enterprise side, we spoke about coding agents reaching around 2 billion in ARR. Google is saying publicly 25% of code is written by coding agents and machines. The enterprise API, GenAI API market this year is going to be 10 billion. I think Anthropic is at 3 billion ARR. And OpenAI will get its fair share. B2B is more of a not a winner takes, it's an oligopolistic market. So they'll take 30 to 40% share. So you add on top of the 100 billion, they can make 30, 40 billion at least in the B2B side. And the other thing is, if you look at history, when Google went public, when Meta went public, these companies were trading at 15 times revenue. And but these have been, Google is up 50 times, Meta is up, I think 20x since the IPO. So these have been amazing bets. So you have to have, the foresight and the courage to look out 5 to 7 years.
Yes, look out 5 to 7 years, and you've certainly taken a big bite. So you have both courage and conviction that you're hoping will play out in the long term. But Sanjay, talking about OpenAI and what we're seeing happen as far as this AI wave is concerned, now where do you find India in that? From a consumer tech point of view, consumer-enabled tech point of view, it's a great market. It's a growing market. Eventually, you will make money. Hopefully, that's the bet. But as far as the AI wave is concerned, where do you find India today?
I think the right, to win for India has changed. A couple of examples. I mean, of course, I'm older than Vivek. So if you go back to offshoring and outsourcing as the first wave, and then you had product innovation. In the, let's say 10 years ago, in the pre-AI world, you could build software from Bangalore, Gurgaon, or Pune, and Chennai, and then come here to sell it, right? Typically, where the Indian typical cross-border founder, you'd have, maybe a team of 5 here, and then, 95, let's say, in Bangalore. In this new wave, your product has to be the best. So, I mean, you may happen to be an Indian origin founder, but doesn't really matter. I think the customer proximity to integrate more closely into your workflow integrations with your customers, you have to be embedded and entrenched. Earlier, just the customer-facing co-founder could be here, but now your head of AI, head of product have to spend time here, because all of us are learning at the same time. Whatever they are, whether they are a CEO or a CFO or a founder or an investor, we're all learning at the same time. So there's no room for error for any learning to be lost in translation. Right. you can't throw it over the wall or for a
Yeah.
different time zone. You have to be here. So we're finding the other India. So India, coming back to India's right to win, I think it'll still be for our companies I would say the product engine, and it has to be much more than labor arbitrage. We have great talent density. I think the administration's policy on visas are interesting because we actually were just able to hire someone who did undergrad here in computer science, worked with two YC-backed companies, but because of visa issues, is now working for us in Bangalore. Now, that is a positive net effect, right? I mean, we're getting somebody from the Valley, the young lady who's moved back. So I think India's right to win has changed in the sense that the best founders who come here are moving. I was just at the YC demo day last week. Of course, it's all in on AI. I saw many Indian origin founders here, but with the 1 foot here, 1 foot there is not working.
Yeah.
They're
so
finding
the foot has to be, the roots have to be here.
Yes.
Now, if you are doing for the world, if you're doing Make in India for the world, you have to be here.
Yeah.
And the Valley is back.
Well, you could say the Valley never left and the Valley's back, but I think it's more real now, like Vivek is saying. And, he's got some great data folded up in his hands about charts.
I know.
Because you're kind of trying to predict the future and saying that, Vivek, you were talking about the incumbents and your disruptors. And remember, every incumbent was once a disruptor.
Yeah. Exactly.
So we're seeing many of them are thinking, how do we partner? You're seeing incumbents strategically invest in some of these disruptors.
Yeah.
So I think working closely with the ecosystem, and you're going to see many more, I think, handshakes, to use that word.
a big feature as far as 2025 and beyond is concerned? Do you believe that, as Sanjay is pointing out, we're likely to see a lot more of that happen because the Davids and Goliath story is going to play out as we've seen in the past?
I think spot on. I think it's an amazing, again, time to be a venture investor in the Valley and globally, because you are at the beginning of a massive S-curve with GenAI. And the incumbents, I think unlike the e-commerce wave where the incumbents were retail companies, they were not ahead of the curve. But I think here incumbents want to be aggressive, but I think they're still tied down by their existing sales motion, existing product teams. So they will do a lot of M&A. And what we've seen is that the new administration is much more in the US. It's much more open to M&A. We saw last week Meta bought Scale AI for 15 billion. We've seen Snowflake acquire a couple of companies, Databricks acquire a couple of companies, ServiceNow acquired a couple of companies as well. So I think it's going to happen a lot. And it's like 1999, 2000, maybe like 168 companies went public in that time. So maybe not a lot of companies going public, but we'll definitely see a lot of
M&A. But even on the going public side of the story, because that's seen a lull in the US, it hasn't seen a lull in India. In India, in fact, we've had perhaps our best year in 2024, but from a new age company listing point of view. But do you see a revival of the IPO market on the anvil?
Yeah. So I think the way we think about this is, IPO markets are always open. Are the entrepreneurs and companies ready to take a fair value that's conducive to us public market investors? And we've seen now Circle, the stablecoin issuer, went public, and the stock is up 7x in a matter of 3 weeks. We've seen Chime, the consumer fintech app, go public. We see in the pipeline Figma, Netscope. We will see a lot of M&A this year. And I think the approach we have as public and private investors that public markets are always open, and we would love to partner with companies who want to go public at a fair valuation.
The IPO story in India continues to look robust. I mean, we've got a whole bunch lined up at this point in time, from Urban Company, Meesho, and of course a lot of the fintech big boys, PhonePe, and so on and so forth.
I think continuous and has become. I mean, I'm going back to 2010, 11 when Karthik and I started Blume, and we were right here talking to Valley VCs. And I remember one of them said, well, how many companies have gone public? You could name it on your hand. You had Make My Trip, Just Dial. And it's very interesting. I think Blume is playing on both these pockets. I think there's a tremendous demand from not just institutional but retail investors for tech. The advantage is that you can have a lower scale but be profitable and go public. So in terms of our portfolio entry and exit construction, that's positive. And on this side, we are looking to partner with large entities, the growth investors like Altimeter, because that's where the AI companies need help, right? They need to build a global footprint, a Valley footprint, get entrenched here. So it's really these two pockets that we are playing in both. And the IPO story is really interesting. I mean, we have a IPO chart with all our companies, our logos, including Purple and everyone else, and say this year are the milestones. This is when they're likely to go public, and we have sort of IPO readiness sessions that Karthik, Ashish, and our head of capital markets do, which was not the case 10 years ago. They either had to be IPOs here or maybe M&As, which are not really not paying for full value. So that's a huge change.
That's a huge change and a huge shift. But you're excited about India and the India story, given the growth of the economy, but also the growth of the consumer tech space in India. But you're not putting your money into India yet. Why is that?
So I think very honestly, it's very rare you see a geography which has trillions in GDP and also growing per capita GDP at like 6-7%. So I think it's the best place to invest from a consumer standpoint. And I think it's very likely that Zomato will eventually be a $100 billion company. You see in every country the local e-commerce player in Korea, in Coupang in Korea, Mercado Libre in Latin America, Amazon in US. We have Shopee in Southeast Asia and like Alibaba, JD in China. So you'll see, I think Zomato will eventually, should eventually likely be that. I think Meesho and Urban, I think I love those companies and entrepreneurs as well. I think the regulatory system in India is such that it's very difficult for foreign investors, both from a tax, compliance, it's a lot of burden to be able to invest in publicly listed companies in India. And we're trying to work closely to figure out solutions, but it's been pretty hard. But I would love to invest in all of these companies.
You would love to invest, but not at the moment. That's, as you're out there perhaps raising money for a fund?
Yeah.
And what's the response been so far? What's the feedback that you're getting?
No, absolutely. So we are now raising our fifth fund. I think the sweet spot has always been about 250 to 300 million. We like that spot because I think the outcomes support it. I think more capital is also always useful, but you always want to measure your outcomes. So I think the response is that it's a tough fundraising market in general. I mean, for the world. But what is interesting is there's a lot of belief in the India story. I'll give an example, Stage.
Yeah.
Stage, which is so interesting. I mean, Neeraj Chopra is a brand ambassador. He's very, very passionate while he practices. He's a proud Indian. He practices, his base is outside India, but he's, proud Haryanvi. They have paying customers and they just complete this round with Goodwater Capital, right from here in the valley that invested in it. And imagine the potential because you land one state and you can go across India. So you have local consumer tech stories with investor interest, and of course that is also helping us because people want to see those stories as well. I think one of the concerns in India has been just the lack of the return of liquidity and DPI. But we just had some good news. Secondaries have taken off, and as we have an IPO chart, we also have a DPI chart. Because LPs are asking for that and saying, okay, this is great, you have all these great markups. And I think the Indian IPO market is a huge, really attractive avenue that's enabling a lot of this, along with a lot of secondary investors who come in. So what India is doing now we need to show this recycling of cash, which is very active in the valley.
Which has started to happen. It started to happen as well. But we were talking about all the charts that you're looking at, Vivek. So throw some numbers at us in terms of what the big bets are going to be. Of course, linked to generative AI and perhaps outside of that as well.
I think the big debate in the market right now is that there is around $500 billion of capex going into GenAI, right? And every year, by the way, right? So if you add it up over 4 years, it's like $2 trillion of capex is going into this big bet. Is there going to be an ROI? And that's the biggest
question.
Debate.
Yes.
And I think if you take a long enough horizon, 5 to 10 years, we definitely believe that there is a very strong ROI. And we are starting to see the shoots, the early signs of those ROIs. And we can walk through certain examples. Just like the way we browse the web. We used to have Google, a $2 trillion company. That was the gateway to the web. And I think that's definitely going to change. I'm not saying Google goes away, but Google search, the way it exists, is going to change. So it most likely our bet is ChatGPT is going to take over. Could be a huge company. That's an amazing ROI. Second big area where we've seen immediate ROI is customer care. $500 billion industry. People are using, even by the way, Meesho in India, I've heard, they are using GenAI. And they've been able to reduce cost and actually improve the CSAT. Because it turns out that the AI is more empathetic than a human being. And I heard that, that was a mind-blowing stat to me. So that's a $500 billion annual revenue industry, and that could be disrupted. Same, is like the Indian IT outsourcing industry. That will, the nature and the margins of that industry will change. Then we go into the coding industry. You have 30 to 50 million developers globally. And the way to think about GenAI attacking this is that this is going to attack basically the salaries of these developers. So that's like a multi-trillion-dollar sort of an asset class. And you have companies like Microsoft yesterday, unfortunately, laying off a lot of people. Amazon publicly saying we need to keep our headcount flat to down. This is the golden age of margin expansion. So another stat is 2011 to 2021, big tech hired, the annual increase in employees at big tech was 25%. Starting 21 to 25, it's been flat. So the entire Silicon Valley had 25% employee growth. Now it's flat because people are, like Google said publicly, 25% of code is being written by GenAI, right? So the cost saving potential runs into trillions. And then, you have education, I can now have a personalized AI tutor teaching me language.
Yeah.
And there's a company called Duolingo, $20 billion company based in Pittsburgh. They are doing that. So I think you go line by line. Maybe in the near term, people are overshooting in terms of expectations, but I think in the long term, people are definitely underestimating.
So let me end by asking you forecasts for the year, whatever is left of it, and for 2026 as well. And I'll ask Vivek that also.
Well, I should have got a sneak preview at his cheat sheet. I think, again, the two Indias, I think the IPO story in India will continue to be stronger. They're all becoming role models, and we have, like, for example, Manish at Purple and Rahul Dipinder at Zomato as a role model. So I think that continues to be very positive. Also building on the coattails of all the stats that Vivek shared. I think here it's certainly the golden wave again, and we're very excited. We were at YC Demo Day, loved what came out of it. We're also learning, that's new. And I think the earlier wave was, the 1 million to 10 million to 25 million scale up was great. Today we're seeing scale ups to 100 million in 3 years. So we have to make sure our founders are part of that we are part of that. So very, very bullish on both the GenAI, vertical AI story here, as well as consumer tech in India.
Okay, your time starts now.
Thanks.
Throw those charts at us.
I think so 2025 and 26 are going to be the years of agents. And let me give you an example that I'm trying to book a flight for my parents to visit us, and you try and book the cheapest flight, so you try and keep checking every day that this is my flight, this is I want to get the cheapest price. But now you can have an agent keep browsing the web for me at the back end and just give me a ping, hey, this is the cheapest flight. I know they don't have like the EU visa, and this is the best time, and just they have my payment information. I just click a button and I say, yes, just do it. So I think the technology exists. I think the tooling is being built, and all of us will be surprised, I can promise you, by what AI can do than not. So I think I'm pretty bullish on agents this year.
So agents will be the big theme, and that clearly seems to be the big bet. Yes, Sanjay?
No, I was just saying the next superhero is the super agent.
Right?
If you have Batman, Superman.
Yes, absolutely. And they're being named very interesting names as well. I was at Salesforce, and I got to see a bunch of them. So yeah, absolutely. The next wave could belong to AI agents. But Sanjay and Vivek, thanks so much for joining us here on Voices from the Valley. Appreciate your time, your insights, as well as your forecast for what the year ahead looks like, and the kind of disruptions that we could perhaps be looking at. We will take a break here on Voices from the Valley, but from all of us here on the team, thanks very much for watching. Do visit us on our YouTube page, log on to our social media handles, and catch all the latest conversations with founders and investors live right here on CNBC TV18. Thanks for watching. We'll be back in a minute.